Hello, welcome back to another episode of the New Finance Podcast. Today we've got Ajit, and of course, as usual,
Hi.
we have Kieran.
Hey guys, Ajit, pleasure to have you.
Good
Legend from
morning
AAVE.
here. Really nice to meet you again, Kieran and Mike.
Yeah, I think last time I saw Ajit was for about 5 seconds at this Seoul Breakpoint conference because there was about 20 people swarming him. So he's a popular man.
Thank you
So
so much. Yes,
we're lucky to have you on.
yes. I'm very. I feel the same way about being on this show. We've been planning this for a while, and
Yeah.
what a wonderful day to make it happen.
Yeah, I'm so glad that we've done it now that we're all poor over the weekend.
Absolutely.
So
Yes. Now we can have those human conversations instead of chasing airdrops.
Exactly, and we can't also claim that we were the top signal either now. So it's
No,
even
no,
better
absolutely
timing.
not.
Yeah, we should
Yep.
probably, just for the sake of people listening, it's the 6th of December and the market just shit itself.
Yeah.
So given that this is called the Skeptics Guide, I think the skeptics are having a wonderful day.
Yeah. Welcome to New Finance, everyone. Yeah.
Well, I don't think so. I mean, I think all of the people who get skeptical about price have just been like gradually proven wrong over time. So I think arguing about
Absolutely.
price is basically pointless. It's,
Yeah.
Yep.
yeah, it's mostly just voodoo as far as I can tell. Okay, cool. So look, probably the best place to start is if Ajit, if you just explain a little bit about sort of your story, how you ended up sort of, I guess, moving into crypto, and then where you've got to now. It'd be cool to understand that.
Yeah, so I've been in blockchain technology for 5 years now, 5 plus 5.5 years. And what's entertaining about that is that blockchain technology and crypto aren't always the same. You wouldn't believe it, as the meme goes. Before that, before that, I was in capital markets, tech, risk modeling, pricing, and a bunch of regulatory change across different investment banks like Goldman Sachs, Barclays Capital, and UBS. Did some consulting for PwC, and it was pretty boring. So there was something interesting going around called blockchain technology, and a lot of clients were starting to ask about it, but no one really had a clue. So coming from a software development background, I think I had a bit of an edge, and I fell into it, and it was really, really interesting. But crypto came to me a little bit late. I got into the whole. I was doing enterprise blockchain for a bit, and then ended up working for Consensus, where I was looking at a lot of different crypto startups as well, and building what they call asset tokenization product called Asset Factory back in the day, now Codify. And then and then ETH crashed, right? Crypto is never boring. Some days it's really, really wonderful. Some days it's really painful. So then crypto crashed, and Consensus shrunk from 1,500 to somewhere around 450, and all of us were asked to find other jobs when there were no other jobs, and of course that's never going to happen again. So I found a role at Binance after consulting for a couple of startups in crypto custody, and built out the banking and payments rails for Binance. So I think, given the extensive network I have at the intersection of emerging tech and financial industry, Stani and I thought it'd be a good place to sort of start thinking about the role of institutions in decentralized finance. Stani is the CEO of AAVE, and his he and the rest of our team have built a really, really remarkable leading DeFi platform, and with a terrific brand, and it's kind of been an ideal platform to speak to institutions about DeFi, institutions including capital markets entities, or central banks, regulators, you name it. It's just been a very, very enjoyable story.
So I think it's super interesting. I mean, it sounds like you're kind of operating in this area that we refer to as new finance, which is this kind of collision of these two worlds of the kind of pure play crypto space and then the kind of regulated space where you have institutions that have to get licenses and deal with central banks and regulators and that kind of stuff. So like from I guess from the highest possible point of view, how do you see the relationship between those two worlds, between crypto and the world of regulated finance? Like how do you see those two interacting, if at all?
Yeah, so so fintech changed the front end. for users, right? So the user experience is now primarily digital, mobile first, but fintech hasn't really changed the backend rails. We're still sitting on Swift. We are still using Visa's interchange, and credit card rails. So the back end of finance hasn't changed, and that's what we tried to do with distributed ledgers or blockchains in the enterprise, right? So all of the projects like VTrade and Comgo and so on, that's what they were supposed to do. We were rewiring the back end of finance with distributed ledgers. Now that didn't work because of that hasn't worked so far because first of all the financial system moves really slowly. Secondly, there is innovator's dilemma, and a lot of good projects get killed. Third, the technology is still maturing, so the level of comfort is not quite there in enterprise. So what happened in the meantime is that innovators like Hayden, innovators like Stanny, Rune, all the DeFi OGs went ahead and built something on public chains, in the open, in an open source public chain environment, in a truly decentralized environment, and that's really taken off, right? I mean, for a variety of reasons. First of all, the tech is ready for that sort of use case. Secondly, the supply of stable coins and the sheer amount of liquidity and risk appetite in the market has been just extraordinary. Third, people are looking for new solutions. People are really fed up with the entire technical and regulatory infrastructure combined that locks out billions of people outside of the financial system. They're looking for just better solutions. So there is demand and there is supply, right? So as a result, DeFi has grown to an extraordinary level. About 250 billion in assets probably last week, probably a bit less today. But overall, I think this type of exponential growth has got the kind of interest from enterprise or from institutions that we weren't able to do in enterprise blockchain, right? Because proof of value wasn't there. I mean, we were really, projects like Utility Settlement Coin, projects like VTrade and Comgo and you name it, Marco Polo and so on. We were just going on and on for 3-4 years with the with just begging for funding and running into internal teams facing an innovator's dilemma and actively or passively resisting some of the innovation. And here we go. The innovators just went ahead and built what they needed to build, and now there is a lot more interest in this whole tech as a result of that. So I'm actually quite thrilled by what I think. We were asking for permission, and DeFi innovators weren't asking for permission. So guess what happens? The DeFi rails have won.
Yeah, so I was going to ask you that question. I was going to ask how much of that activity where the growth has occurred do you think would have been permitted if they'd have asked for permission from the regulators?
I think we have data for that. So the short answer is, it's not so much the regulators. It's the legacy rails. It's the people whose jobs are affected by innovation that actively or passively throw that stop innovation from happening. Right? I mean, people are used to working in certain ways, and if you build new tech and you build new processes that are automated, they actively or passively kill those. So the annual budget cycles in banks, the funding cycles, the risk appetite, the whole thing simply doesn't work for new tech, right? And it's not just blockchain. I mean, how many banks have good mobile apps, right? I mean, Revolut is already at 33 billion. RBS can't release a decent mobile app, right? I mean, how long we have had this technology for 12 years? I mean, mobile apps. So it's not just blockchain. I mean, legacy financial institutions simply aren't built to innovate. And everyone uses regulators as the boogeyman and says, oh, because the regulators we are unable to innovate. I'm afraid that's actually not true. I think it's just the innovator's dilemma, and I mean, it's just truly frustrating if you're actually trying to get something done, right? So DeFi has happened because there were no legacy rails to replace. We just went ahead and built really good stuff.
Mm. Is your point that the regulators would permit it? The reason that you can't develop these propositions if you ask for permission is actually because the banks wouldn't provide you the underlying kind of access to the rails you need in order to deliver this stuff.
Yes, if you read, Ryan Selkis's latest Messari report, crypto has benefited from the lack of regulatory clarity, right? And that's his view, and that's always been my view. So to some extent, regulators have actually had a very favorable stance towards crypto, right? So William Hinman, essentially declared ETH as sufficiently decentralized, right? So then CFTC before that declared Bitcoin a commodity. So regulators are often, everybody likes to point at regulators and say they are stopping innovation, and there is some truth to that, right? I think the new regime in the US is a little bit unfriendly. It's quite sometimes very unfriendly, but I think overall this willingness of regulators to let the innovators experiment is how we got here, right?
But
So if,
Okay.
and I think we should recognize that.
do you think, okay, so let's take, for example, the new regime in the US. Do you think that their caution with regard to DeFi and crypto, or whatever word, do you think their caution with regards to it is unwarranted and irrational? Or do you think that Gary Gensler is doing his job, in that his job as the regulator is to oversee risk in financial markets, and if the DeFi system evolves to undermine that authority, then effectively he'd be failing at his job if he didn't do something to control it?
So regulation exists in a political environment, right? So behind all regulation there is politics.
Hmm.
So because remember Bob Diamond, and Bob was the star of apple of everyone's eyes, and then Barclays had this LIBOR crisis, and the same politicians who were supporting him were essentially going after him. So we've got to a very, crypto is now a 3 trillion industry. You cannot say, oh, just leave us alone and we'll do whatever we want. That's not done. It was fine when it was 1 trillion in under 1 trillion market cap, most of it Bitcoin, a playground of the devs. It was perfectly fine. Now, so is Gary and the other agencies, is Mr. Gensler and the other agencies going about this the right way? No, not at all. I mean, they picked Uniswap and Compound. I mean, nobody went after Shiba Inu and Cardano and all those exchange-owned chains. I mean, they're going after the people who are actually innovating and building stuff. So I mean, is it right to bring attention and say, look, we need to create standards and we need to create new
Hmm.
regulation and new reg tech so that the objectives of regulation, which are consumer protection, market transparency,
Hmm.
financial stability, those are achieved? Yes, absolutely. We need to pursue those together, right? But are they going after the right targets and in the right way? Absolutely not. I think people are, we just, I mean, out of the 3 trillion crypto, you find Uniswap and Compound, really?
But as far as I understand it, one of the
Really?
reasons they picked Uniswap was not Uniswap the protocol, it's Uniswap the front end, which is more of
Yeah.
a kind of organization that they can get their teeth into. So I think one of the reasons that the regulators have been slow or cautious is because a lot of their kind of legislative framework that they work within is designed around kind of the concept of firms and appointed representatives and boards and all sorts of kind of centralized governance that ultimately can't get its teeth into these kind of totally decentralized protocols. But in the case of Uniswap, there is a front end UI which it kind of does look a lot more like an institution that they can get their teeth into, which I think is why they've kind of why they've headed towards it.
So my point was that out of the 3 trillion, there is a 20 there's a 32 billion market cap thing called Shiba Inu out there, which adds absolutely zero value to society. I mean, I'm sure there will be people on the other side of that argument as well. There are actually multi-level marketing schemes. There is absolutely useless technology which contributes nothing to innovation or society, and you pick really the one useful app. Something feels off about that, right? So regulation that we have today is, so how did we get to today's regulation? Because we had all these accidents with Wall Street, right? Somebody screwed something up, and then we created new rules. So there is a market failure. We patch it up with new rules. So as a result, over 100 plus years now, we have ended up with a mountain of rules on top of rules, and sometimes mutually conflicting rules.
Hmm.
It's impossible for even a bank, and I used to work for banks, yeah, and doing reg change and all that. So
Hmm.
it's impossible for banks to comply with those rules, and now you're imposing those a mountain of paperwork on technology that's supposed to be paperless. I mean, maybe we need to work together and create new rules. So there are 2 points. One, the rules aren't ready for the markets and the tech that's being created. The rules need to change, and because we can achieve the same objectives with better tech and fewer less paper. The second thing is that I don't think the agencies are picking the right targets. I mean, these targets might make their careers, or make them because Uniswap is sort of the biggest DApp, and it's the most successful, one of the most successful Web3 dApps out there. So you pick that as to make an example. But I mean, are those the right people to go after? Are innovators the right people you want to disincentivize with regulation? I mean, really.
I mean, to be fair to the regulator, that tends to be how they're wired. So regulators tend to, when they supervise firms, they tend to kind of allocate the size of team based on the volumes and the relative risk that they pose systemically. So I guess the reason why they're picking large volume networks isn't necessarily because they believe that Uniswap is sort of less well managed than some smaller organization. It's probably the opposite. The reason why they're giving them attention is because they've got to a size where the risks represent something that's worth them getting out of bed for.
So we are saying the risks to consumers is higher from Uniswap than from Shiba Inu and Dogecoin,
Well, that's the
or
way that
and
the regulator
Cardano.
would see it, because they think
Okay,
in
then
terms
then
of.
we need new regulation, clearly.
Well, so I agree with you, and I think your point is well made about a lot of these things, particularly regulation being political. So one of the challenges, I think, with the whole kind of DeFi movement, let's call it, is that it does, as you're pointing out, depend on a kind of attitudinal change in terms of how we govern finance as a society. Now, the problem with that is that's not a technical problem, that's a political problem. I mean, you just
I agree.
accepted that. So
Yeah.
one of my issues with this entire thing is I think maybe the crypto community and the DeFi community need to be more explicit about this and create more of a stop talking about blockchains and decentralization and self-sovereignty and start talking about some of the problems with regulatory capture and all of the things associated with kind of like the government failure of over-regulation of financial markets. And for sure, that is the case. I think the problem is that currently the narrative is that the problem with the financial industry is that banks are getting away with murder and we need more regulation. That's unfortunately
Yeah.
the reality of the attitude towards even something like the global financial crisis. So
Yeah, and
Austrian economists don't believe that the global financial crisis was caused by not enough regulation. They think the opposite, but the vast majority of the planet doesn't see it that way, and that's a
Will it
problem for them.
will it also depend on how these things are structured? So no offense to any Shiba Maxis out there, but that it's harder to we triggered all of them. Harder to attack or to regulate that versus a Uniswap front end because of how
not at all.
Uniswap is structured. Is it easier to go after them?
No. It's a Cardano has a very well-known founder.
Sure. Yeah.
Shiba Inu has a small set of team members. So I don't think that's hard at all. But anyways, I'm not suggesting that regulators should pick this or that. I'm just saying that innovation should be incentivized in the society, and especially legitimate innovation by well-known people who are actually who have integrity and are building good products. And what kind, that's how the U.S. is what it is, right? The U.S. wouldn't be the leading economy if we didn't incentivize innovation. Now, I'm not saying that we should hand over everything to the tech industry, and tech should reign supreme, and we don't need law and other arms of the society, or the judiciary and so on. That's not my point at all. So I think we are kind of starting to agree that there is need for regulation. There is potentially need for new regulation that accounts for the availability of better tech and different market structures, and that needs to be a collaborative process, right? So things like
Yeah.
DeFi Education Fund,
Yeah.
things like GDF. So there are lots of blockchain association. So here is what's going on, right? So regulators are all, and the president of the United States, everyone is like 70 plus years old. The innovators are 17 years old. So I mean, there is no communication between these two, between the grandpas who are kind of enforcing the rules from the 30s, and this is not an ageist comment. This is just the reality of mental models of the world from 1934, and the mental model of the world that's of the kids hanging out on
Right.
Discord and the DAOs, and right. So we need to start talking to each other
But
in a more constructive way.
if they have antithetical views, it doesn't matter if they communicate. They're talking past each other, right? So if you're in a regulator,
I
it doesn't
think
really matter how old you are. If you're in a regulator and you believe that your entire reason for existing and the reason you get up in the morning is in order to proactively control risk in financial markets, then you are almost by definition going to disagree with all the people who are committing their entire life to trying to build a totally different system where there isn't centralized oversight over financial activity.
so. I think, Mike, incentives matter. you show me the
Yeah.
incentives and I'll show you the outcomes.
Right.
Yeah.
So it would be naive for us to assume that, let's say the people in charge of policy institutions and regulation are doing this altruistically for the society and they don't have any personal ambitions. I think there are people out there, who are actually doing this squarely for to promote their personal agenda and build a profile for the next job. And I'm surprised by how people, who are quite post-retirement are also have that sort of ambition instead of
Mhm.
sort of looking at. And we see that across the board, right? We see that in law and finance. We see that in when we're dealing with global warming. I mean, you have 80-year-olds probably, who are not worried about where this planet is going to be in 20, 30 years time. So there is a lot of vested self-interest that's driving the regulatory agenda. It's not all, altruistic out there.
There's definitely individual incentives, and we could speculate about what their sort of ratio of malevolence versus benign. Like fair enough. That's probably true. But ostensibly, like that's the position of the regulator as an institution is to exist to solve that problem. But so maybe I
Well, Mike,
guess.
can I?
Well, just one more final point on that and then we can move on to something else. So
Well, I wanted to add as well.
oh,
Just I
okay.
think
All right.
just on that, I think that's where things like the work Neeraj does at Coin Center, or when
Yeah.
we were at a Soul Breakpoint, I was listening to a really good panel with Michelle Bond and Jed Halfon and Greg. I can't remember his surname now, but they were talking about regulation and regulatory views, and they were quite open to this idea of let's start getting ahead of the game and building some of these either self-regulatory orgs or organizations that will engage in conversation. So the argument wasn't, oh, we're just going to self-regulate, but it was more, let's build some platforms where we can have almost a middleman to break down or to be in the middle of that communication, so you don't have, like you said, Mike, people just talking past each other.
Yeah, but this has been, to be fair, this has been going on since like 2013. So I invested in something called the UK. I invested in something called the UK Digital Currency Association. That was like I think 2012, 2013 when it was formed. I invested like a load of Bitcoin. I don't even want to think how much that's worth now. And we basically, because we were all trying to build startups and we couldn't get any regulatory clarity, which meant the banks wouldn't touch us. So we created a lobbying group, a whole bunch of us who were building startups in Bitcoin, to basically try to force the regulator to give some clarity so that we could make the banks give us access. And so this has been going on. Like, now, I just wanted to round this off. Like, I wanted to just make a final point. So my final point would be, or I guess more of a question is, why? So given that the regulator sort of has this sort of misaligned incentive where effectively they're measured by the amount of consumer detriment that occurs, right? And that creates a situation where even though the regulators say that they're kind of in favor of innovation, in reality, they're really measured purely by the amount of detriment that consumers, experience. And so that creates a directly misaligned incentive from the regulator to support innovation, because all that really represents to the institution is a risk that they might end up with egg on their face. So the question is, what is the way that one might measure innovation or the opportunity cost of lost innovation if regulators over-regulate? Because unless you can figure out a way to measure that, it's almost impossible that you will manage to force these regulators to behave in a different way.
Right. So I think there are a couple of things we can do. So first of all, so the UK has a £14 billion gambling industry where people, and I mean ordinary people, high school teachers, and postmen and women, and I mean they're allowed to lose their savings and on betting on horses and football games, and that's perfectly okay in this country. So hey, we care about consumer harm, right? Sorry to be a bit sarcastic here, but so I think, but the reason is those things have become socially acceptable, right? As in they're part of the social fabric. So there is no real political incentive for, and regulation is really a part of the political economy that Adam Smith used to talk about, right? So he never called it economics; he said political economy, because politics and economy are joined at the hip.
Yeah.
So gambling is perfectly okay. Chasing hounds and betting on hounds and horses is perfectly fine. Crypto is certainly not, because it's actually new, and the gerontocracy doesn't play that game. So I think as crypto gains more wide adoption in the society, and becomes a way of investing in these Web3 networks, and So accredited investor rules. I could write a book about how accredited investor rules lock grandma out of gains, right? So we used to have 500 million IPOs back in '99, and sorry to hint that I'm actually that old, but now we have nothing IPOs for under $2, $3, $4 billion. I mean, what
Yep.
the hell is going on? We are locking grandma out of gains for a very, very long time. So are these? I mean, what are we? And meantime, inflation is eating away into our pensions, right? We are actually, the government may not pay off because the government is so actually indebted. So I don't know what this consumer protection thing is that we are talking about. I think we need to sort of, what's going to happen as a result of crypto and the adoption of crypto is that all these questions are going to be asked and people will start asking the right questions, which is how do we, bring consumers back into not just risk but also return. Robinhood is not protecting anyone from risk. It's a perfectly permitted operation. Robinhood is actually protect. So everyone is included in risk, but grandma is not included in return. So maybe it's time to balance that
Yeah,
portfolio of risk and
so I
return.
think in general, I think I agree with your point that ultimately, if as a society we're going to allow people to like spin 100K on red, we should probably be allowing them to like have access to financial markets, right? If we're okay with
Yeah.
that, why wouldn't we be
Yeah,
okay with the other, right? Like that's fine. I'm okay with
absolutely.
that
Yeah.
idea.
Yeah,
The
there is
point that
at
I
least
was
some
making
upside. Yeah.
the point that I was making was more about like I guess the principle of regulated finance, which is less to do with access on the well, it includes access on the consumer side, but more so to do with financial activity itself being a permissioned activity, and that you need to apply for a license and you have to accord with rules and regulations. That's
Yeah,
a slightly
yeah.
different question, right?
Yeah, so no, absolutely, and there are good reasons for that. So I think supervision requires on a relies on a licensing and registration regime, and it also
Mm.
sets some standards. So it's absolutely, I mean, and ultimately it's other people's money, right? So you're dealing with other people's money. So should there be crypto asset registration and other similar regimes?
Mhm.
Absolutely. Should there be minimum standards and controls in place? 100%, right? So I think there's nothing wrong with the regime per se. I think the way it's implemented, right? It's an implementation and enforcement question. The way implement we are still our regulators are built for, and regulatory regime is built for an era of paper, for
Mhm.
hiring lots of expensive lawyers and auditors, right? So the
Yep.
entire industry relies on big four.
Mhm.
Regulation does
Yeah.
not function without one of my without my former employer. And that's a really and guess who pays for it? The consumer pays for it. The industry, in the industry will eventually just pass on the cost to the consumer and lock consumers out of access to credit and refuse to serve the marginal customer because it's unprofitable. That's what's going on. So I think we need to rewire, take advantage of this new technology, and using the transparency benefits and the automation benefits of DeFi, start to build rails that are much easier to supervise than the current rails where we have to send an army of auditors to run queries against a database and load a spreadsheet to produce a report. That's just that time has passed. I mean, that was 50 years ago.
That
Yeah,
might be a good
but
jumping off point actually
mm,
there, because I was just interested to hear a bit about kind of what AAVE is doing with institutions and engagement, as I know you guys have been quite forward thinking on that and on a lot of these issues. And I mean, you guys have what is it under TVL now? Is it 35, 40 billion?
It's close to 30 billion.
Yeah,
I
yeah.
think today it should be
It's been
25.
re-rated over the weekend, um,
Everything
but
is.
yeah, but
Yeah.
yeah, obviously you guys have been quite forward thinking in that, and I know you were looking at some institutional pools and been engaging with these guys. I don't know if there's it'd be interesting to kind of share some thoughts about how you guys are approaching this and what the responses are, maybe.
Yeah. So we've had an extraordinary amount of inbound interest so we, being a DeFi protocol, we don't have any marketing or sales or any such thing. uh, you know, so we get a lot of inbound because Aave is such a, Stani has built such an incredible brand, and so we get a lot of inbound interest from a variety of financial institutions, family offices, hedge funds, asset managers, investment banks, you name it, and also central banks. So we've been doing a lot of work around education and speaking to institutions about DeFi and really being proactive and in explaining what this technology can do, what it does today, and learning from the policy institutions as well. So one thing that's been very, very clear is that a lot of Western regulated institutions cannot use DeFi unless without KYC, right? So unless every entity or participant has been KYC'd, and there is like a bunch variety of transaction monitoring tools and this and that on the liquidity pools, a lot of Western regulated institutions, given their compliance and risk parameters, cannot use DeFi. I mean, so that message has been very clear. And for us, the second challenge has been how do we get 8 billion people to use DeFi, right? I mean, right now, DeFi has got to, according to consensus, 10 to 15 million users. Now, that's a rounding error when we think about how many people need access to the financial system. And if we just, we're not building this just for crypto natives or crypto wealthy or so on and so forth. This infrastructure only makes sense if it's accessible to everyone. And one thing that's, we have reluctantly started to acknowledge is that the distribution of DeFi will come through TradFi, right? I think not just through TradFi, a lot of users will be Web3 native and they will connect MetaMask directly into AAVE and then use AAVE and Uniswap and whatever. But a lot of users still find that experience untenable, right? I mean, it's just too clunky, too complicated. Even NFT influencers keep losing their seed phrases with millions of, I mean,
Yeah.
sorry, that was a joke, but also true.
We see it
So,
happen. Yeah.
Yeah, I mean,
so
the problem is that it's actually true, though, right? I mean,
Yeah.
for most
that's true.
users, the
Yeah,
cost of risk of managing their keys is more
yeah,
expensive than the cost of risk of signing a contract with a custodian.
right, right,
Which so
right.
Yeah.
So how if yeah,
Well,
sorry.
and
So
we
so,
touched.
so if
Yeah.
Robinhood or Revolut or Galaxy or these institutions want to and fintechs want to connect to Aave and offer their
Mhm.
customers a high yield account, for example, they need a permission pool, right? That's the only way they can do it under their regulatory requirements.
Mm.
So here
Yeah.
we go. So we have just launched the ARC pool with Fireblocks. We call it ARC because ARC is this is the symbolism for the bridge between traditional finance and DeFi. One of the things we chose not to do is to, we chose not to build a federated architecture where, we hide all of the DeFi from institutions, like, some of the other protocols have done, and they just send us the money in fiat and we deal with the rest of it, right? So we didn't want to do that. We also didn't want to offer a centralized interface on top of DeFi. The goal of this whole exercise is to bring institutions into a Web3 native DeFi experience.
Mhm.
Yes, it's still a piece of work for them, sometimes to get a Fireblocks wallet, open a Wallet Connect API connection to the Aave protocol, and then interact with it in a Web3 native way. But there is a bigger game in sight, right? So we want institutions directly involved in the governance of the protocol. That's how we're going to scale from 15 million to 8 billion, and truly web 3. We call it web 3 because we are serious about the web size of it, right? If it's going to
Yeah.
be web scale and we're going to go from 25 billion to $1 trillion in liquidity, then institutions have to be involved. Then we're looking at
Mm.
critical infrastructure that will be governed by institutions and other aspects, other parts of the society. So here we go. So we are just, triggering a bit of making a small dent in the universe, and then there are 12 other DeFi protocols that want to follow into this environment, so that people can build composable applications, financial applications using the software that we built.
Yeah, I
Okay.
mean, I've seen interesting things like I think we touched on it on another pod, but was it SocGen did the real estate loan on MakerDAO as well? Like you are starting to see a few institutional players interacting with these things, even if I think it was 20 million, which
Which
to
is a
use your
which
word
is
is
a
a
pretty big
rounding.
number for SocGen when you think about it.
Yeah,
Yeah.
it's a rounding error for some companies, but it's a big number for them, and it's
Well,
an interesting
it's a big
foray.
number because this is the first time in DeFi that a traditional bank has come in and put some
Yeah.
serious money. This is not play money. This is $20 million. I mean, somebody could get fired for that. So it's actually, I mean, they've done a remarkable job of being innovators and leading from the front. I'm a big fan of what they've achieved.
Do they have a
Yeah.
stake in Aave in any way?
Not that I'm aware of,
Okay.
So we don't. Aave has 100,000+ token holders. We don't know who they are,
Right.
So unless they post on Twitter
So
that
they
they're
haven't
holding Aave
declared they
tokens,
haven't
we don't
declared
know.
any kind of any holding.
No, no. So what SocGen have done is, they've taken, they have used the bonds, a portfolio of bonds to as collateral in Maker to mint DAI, and
Mhm.
so you see where this is going, right? So now those DAI could be deposited in Aave and borrowed by other institutions. So you
Mhm.
you start to build this, you know, end-to-end permission DeFi ecosystem, and using this type of composability, you start to create a whole new infrastructure, which is Web3 native, internet first, back end of financial services. So if you're me, then you're really excited about the possibility of what this can become, right? Sure, if it takes
Mhm.
5 years, great. If it takes 12 years, great. If it takes 20, I hope I'll still be here. So I think it's remarkably exciting what we can achieve with this new technology. And if DeFi hadn't grown to the levels it has grown to, we wouldn't be getting this type of support from institutions. And now it's time to bring all that talent into this Web3 native rails, right? And
Mhm.
how do we do that? You're not going to hire all of Goldman Sachs. I mean, hopefully not. It's too expensive. But what you can do is you can get Goldman Sachs to directly contribute into DeFi, participate in governance, bring all of their quantitative and risk expertise and operational risk expertise, and then it becomes a whole other proposition. We can start to create things we haven't imagined yet.
Mm.
So, so the bit that I'm interested in what you mentioned there is the question of kind of your reason for picking a non-federated architecture versus a decentralized architecture. Now, so let me just try and unpick that a bit because I'm not familiar with the specifics of that. So you're saying that the protocol itself is decentralized. It's not a federated protocol,
No,
right?
absolutely.
So you mentioned that you do have a kind of KYC regime,
Hmm.
let's say,
Hmm.
within the
Hmm.
protocol. I
Yeah,
assume that that KYC regime itself is federated, right? So what you have are
as of
actors
yes,
within the decentralized system who can whitelist users effectively by taking them through a KYC process. So what
that's
you
exactly
have
right.
is a decentralized protocol with a federated topology on top of it, right? That's
So
what's
the
essentially happening in the
yes,
network.
the identity part, the KYC part is
Right.
by nature federated, because that's regulators
Hmm.
require all the entities performing KYC and transaction monitoring to hold the liability. They cannot outsource it to Shift Network or another Nota Bene or one of these KYC providers. They can rely on their data, right? So they can rely on the data coming from Securitize and other protocols,
Hmm.
but they have to hold the liability for KYCing and
Hmm.
for document retention, for record keeping, all of those
Hmm.
things. So KYC by nature is is federated. That's how rules built it. But why do we think ARC is decentralized? Is because governance makes the decisions, right? So Fireblocks came in and they said we want to be listed as a whitelister. Aave team didn't make that decision. Aave
Hmm.
team didn't, choose Fireblocks. So the Genesis team, it provided essentially, questions and answers to questions, and Fireblocks applied directly on the governance forum. They submitted a governance proposal. There was a vote, and through that vote, Fireblocks became a whitelister. So because the governance approved it. Now Aave team didn't vote in that. So
Hmm.
even the Aave Treasury didn't vote in that. It's just entirely external token holders who made that decision. So they can also appoint and they can also remove whitelisters, right? So that's why. Because of the economic decentralization and decision making that's decentralized, ARC is decentralized. Yes, the KYC part by nature is federated.
Yeah,
Right.
but but the distribution of those governance tokens is not necessarily decentralized in the sense that you could end up with a small number of large governance token holders, which is
Yes, yes,
effectively, I mean, the financial scheme is rife with, a financial system is rife with schemes that are effectively consortia of banks building various different types of schemes, whether it's payment schemes or other
yeah,
types of clearing settlement
yeah,
schemes. So
I
Visa
agree.
would be a good example of a scheme that was developed by banks. They governed that organization. They then ended up handed it off and it went private. But this is not like this idea of kind of quote unquote decentralized governance is actually not, this isn't new in finance, right? This has been going on for decades.
Yeah, what is new is that, out of the 100,000 plus token holders, some people are like me, some people are like my son, so a lot of the voters have small stakes. Now, the other thing is in Web3, the cost of experimentation is actually very low. If you want to run a governance proposal through Swift, say, we should have quadratic voting, and Goldman Sachs should have the square root of their economic stake as votes. That's going to take forever. If you want to run that sort of a proposal and through the Aave DAO and say, look, we should change the governance mechanism to do quadratic voting, I think you could actually realistically make that happen, right? So there are
Hmm.
lots of new DAOs that are experimenting with NFT based voting, that are where it's kind of like one
As
person one
as
vote.
long as the
Yeah.
large institutions who you're effectively introducing that change against don't already have quorum. If they have quorum in the governance, then why would they vote against their own interests?
Yeah, so there is also transparency, right? So remember, ultimately the consumer wins.
Mm.
So I mean, you would hope so, unless the problem with modern regulation is that it does not let the consumer decide, right? So banks have these, so whether it's big tech companies or banks or whoever, these are so entrenched, these institutions, that Facebook, for example, or they're so entrenched, and regulation entrenches them further, and that's something that needs to change. Now, if Aave wasn't democratic, or Aave governance wasn't what people perceived as fair, they could just go somewhere else. They can fork Aave and build another Aave. I mean, and some people have
Well,
tried that, right?
so that's true
So
to that's
yeah,
true to some extent. Although a lot of these propositions, particularly in the world of finance and big tech, they have large moats which are more to do with network effects. So whilst that can be true, kind of from a purely technological point of view, and the internet and the web is a good example of that. The internet and the web is a decentralized system, but the reality is that because of the way that humans organize, you end up with these large institutions that people gravitate towards, and then they benefit from network effects. So that what should be a decentralized system that puts pressure on actors who start to act against the interests of their users, whether it's censoring specific, political parties or whatever, or whether or not it's, just monetizing users and then not passing any of that, value extraction back to users, right? Like in theory, the market should act against that. In practice, because of network effects, that doesn't happen. So I think so a good example of this actually in the finance industry is open banking. So one of the things that's happened in the finance industry is that users haven't had control over their bank accounts, the data that's in their bank accounts, the ability to instruct payments from their bank accounts, which leads to all sorts of market failure and is one of the
yeah,
primary reasons why there's so much atrophy
I
in,
agree.
in consumers and retail banking. Now, the regulators
Yeah,
figured this out, right? They figured this out and they were like, right, we're going to force the banks to open up APIs so third parties can get access for free in an open way. And this has
yeah.
already started to have tons of positive benefits in the finance world,
I
particularly
mean,
in the UK and Europe. So the question
yeah,
is,
Mike.
if you have an unregulated financial industry like the crypto industry, and you ended up with the Coinbases of these worlds, who, by the way, have terrible APIs, what are the mechanisms that society can use in order to kind of unfuck that problem?
Yeah, so a couple of things, right? First of all, crypto is not unregulated. I think there is a lot of lack of regulatory clarity around crypto, but I mean, crypto is definitely not unregulated, and you could, that could be a topic for another podcast. So maybe
Right.
We'll
we
get
shouldn't debate that.
yeah, we'll get you on
Yeah,
for season 2.
yeah,
Yeah, for
is
that.
is crypto regulated or not, right? That should be a whole
Yeah.
other discussion. So crypto is definitely regulated. There's a lot of lack of regulatory clarity around, a variety of tokens and this and that.
Mm.
So and also, what sort of rules govern the conduct and controls of centralized crypto exchanges, protocols, and so on. Yeah, I agree. There is lack of clarity. So now the second thing is open banking. Yeah, sure, I'm a big fan, but has it really happened in the UK and Europe? And how successful have banks been in actively throwing stones in the path, rocks in the path of open banking and somehow keeping it off? That's debatable.
Well,
We'll need another podcast for that too. So
well,
I
I
think
could
it's
maybe.
not all network effect. It's also the licensing regime which entrenches and the cost of capital and cost of just setting up a bank and so on. Now fintech is skimming the top of that industry and doing all the cream on top stuff. But banks are very, very entrenched,
Well,
thanks to our
so
regulatory regime.
yeah, so I think so maybe some of it's to do with regulatory capture and the regulatory failure of creating a walled garden. But I mean,
Yeah.
that's sort of like an inevitable sort of trade-off with licensed regimes anyway, right? Like you can't really get away from the fact that if you
I
create a
don't know
licensed
if
regime,
it's
well, it is by definition it's a barrier
no,
to
no,
entry,
no.
right?
Mike, there used to be something called antitrust, so the Bell Labs, sorry, the Baby Bells. Remember the Baby Bells? There was a time when we had functioning competition law and antitrust regimes, and so there were big giant monopolies like Standard Oil and in the U.S. and AT&T and so on and so forth, and they
Mm.
were broken up, and we got some competition, and we got cheaper prices on everything, right? So at some point, antitrust regime failed. It failed because there was this implicit assumption that big corporations are more efficient, and because we don't know what we don't know. So if Google is the cheapest search engine, so Google should be allowed to do. But we didn't really recognize the externalities that there is an economist called Pigou that used to talk about,
Hmm.
a British guy. Nobody ever loved him except he was right. maybe because he was unpopular, because he was right. So no, I think it's a failure
I
of
feel like that
policy and
sometimes.
law, because of which why we have ended up with this scenario. And I think a lot of the crypto revolution is essentially a direct reaction to the failure of some of the institutions of society. And
Hmm.
it's time to start. The crypto is also an opportunity for us to sort of start looking at where markets might have failed and policy might have failed, and we start to sort of redesign some of the systems to actually respond to the demand. It's not just going to be go away because somebody launches a CBDC. So I mean, there is a whole internet native communities. There is also a change in the architecture of the society, right? I think we are now internet first. People are looking for metaverses. My 12-year-old is spending a lot of time on Discord. Maybe I should do something about it. And he is playing Minecraft a lot. So there is a whole new generation that's coming through. And there's no point in, I have zero interest in working for the society that's already passed. So I'm much more interested in working for the kids, and and I hope the rest of my generation and anyone who is older actually decides to build a better place for the kids, and that will require new rules.
Yeah, I guess where the sort of nuance is to what extent is so that there's some activity that's ideologically motivated, which sounds good, but is actually a total waste of time, right? And then there's some activity which is like jumping in the belly of the beast to actually figure out how to make practical changes to the way that the financial system works. And one of my frustrations with the DeFi and the crypto community is there's way too much attention and focus on kind of glorified LARPing, basically, where everything is optimized for the optics of the people who are engaging in the activity, rather than in trying to practically figure out how to improve finance for ordinary people and businesses.
Yeah, so Mike, I'm not agreeing with what you just said. I think when you in the French Revolution, you had Jacobins and you had people who took advantage of the situation, and people who just wanted to capture power. You get all kinds of people in every revolution, right? So you
Mm-hmm.
never get everyone on the same side. There are genuine, authentic builders like Stani and Hayden and Rune and so on. There are people who just want to launch dog coins and make a lot of money. There are people, NFT influencers, who just want to sell a lot of JPEGs and retire and buy a private island. You get all kinds of people in every revolution. I think the question is, what do we choose to focus on, right? What's left after this? The revolution is over. Are we going to bring the Louis the 16th back, or are we actually going to change the society for the better, right? So I choose to focus on. I choose to focus on the positives, and yeah, also recognize the negatives, right? Of
Right.
course, we all need to do that. But I think if we get too despondent and say, look, nothing ever changes, it's all over, these guys are just doing it for the optics, then I think we might miss out on the opportunity to make positive
Yeah.
change. So maybe let's
Yeah.
balance
No,
that a little bit.
that's fair. I mean, it's it's
Hmm.
it's unfair to put everybody in that bin, I guess.
Yeah.
I guess the point I'm making is that the signal to noise ratio in the DeFi and the crypto space is not good. And unfortunately, as far as I can tell, a lot of people don't pay attention to how to like practically and tactically achieve the outcomes that they say they
We
want.
did not print $1 trillion. Sorry, what is it? How many trillions is that? So the Fed decided to create a bubble. It's not the industry's fault. We have Rivian at 100 billion, and the people have nothing, right? I mean, there is Tesla is at a godforsaken valuation, 325x. Whatever. We didn't create this bubble. I
Mhm.
mean, there is a cross asset class bubble. I mean, this is the government actually printing money to stay out of debt. So this is a that's a policy. Inflation is running hot at 25%, and the Fed keeps printing money. I mean,
Okay,
because the stockholders are running these institutions. So the failure of institutions is everywhere. Read Rand Selkis's Messari report, and it's quite compelling, right?
mhm.
So the institutions are failing us. So maybe it's time to rebuild the institutions with better tech and with better laws.
Sure. And like the monetary thing is a total rabbit hole. But let
Yeah,
me just
we didn't
like
do
let's say
that.
for
I mean, it's
argument's
not
sake
our
we
fault,
agree on that.
right? Yeah.
I guess my point is more on this issue of like the traditional incumbent financial system suffers badly because of competition issues, which I mean you just acknowledged that
Yeah.
that's a truism,
Yeah.
right?
Yeah.
So my question is, why is it that the crypto community is not more aggressive in addressing its own issues with this, with like highly centralized actors like Coinbase who don't offer kind of quality open APIs because they have misaligned incentives. Like all that seems to be happening is the same topology which fails in the traditional finance world is being resurrected in a less controllable way in the in the crypto and DeFi world. And to me, that seems like a risk. It seems like something that if you believed in creating a more open, more in practice decentralized system, you'd be interested in trying to create a kind of what's the word, like an ethos or a set of principles around openness and open APIs and giving consumers genuine control over their accounts on these centralized actors. And that isn't something that's happening. And if you understand the finance industry, I don't understand why you wouldn't be more keen on not seeing that reproduced.
So let's see. I think there is a bigger picture to this, right? So I was in the meeting when Coinbase were trying to get RBS to give them a bank account. And I think RBS will regret it for the rest of their lives. So banks had that opportunity and banks let it go, right? So now you end up with very successful businesses like Coinbase, and you could say they are centralized in the same way as any other exchange, and sure they should have better tech and this and that, but they've also contributed enormously to market liquidity. They have also contributed, they have also created products like Coinbase Wallet. They have created products like Coinbase Cloud. I know a lot of great people at Coinbase who are tech first, product first, and they are a publicly run corporation. So they have some incentives and requirements of a publicly run corporation to do what is in the best interest of shareholder value, and I totally respect that. So now you can't expect Coinbase to do what the other arms of society are supposed to do. So
So
and also look,
I'm not making a
yeah,
case that XX and Coinbase should do anything. What I'm saying is that the excuses that you just gave are exactly the excuses that
I
HSBC
mean,
give for
I
their
take offense
activities.
to that. So, I mean, I'm not agreeing with you that, so look, Coinbase have their own role. You have to draw a mosaic and see, it's Aave has a role, Coinbase
Mm-hmm.
has a role, the Ethereum Foundation has a role. I
Mm-hmm.
mean, even the Shiba Inu and Dogecoins of the world have a role. And then once we draw this, throw all these things on the wall and say, how do we draw this into a coherent picture?
Mm-hmm.
That's the role of policy institutions, right? So I think if we don't need to start picking, and say, locos, Coinbase looks just like they don't look like a bank. They are a tech company. So banks keep talking about being a tech company. Deutsche Bank were talking about being a tech company, and all they were doing is spreadsheets. Coinbase are a tech first company. I mean, sure they have a lot of demand and they need to scale better. But my point is. So I don't mean to be spending the rest of my time defending Coinbase, but I think we are focusing too much on the risks and not on the opportunity. And that's you look if the policy institutions let them become a Google, they will absolutely become a Google, right? I mean that's what happened to Google because the society let Google become Google, and Google went from I don't want to say it. So I think there is a role for policy institutions, but Coinbase are doing what they're supposed to do. They're building Coinbase Wallet, Coinbase Cloud, Coinbase NFT. They're providing liquidity, market liquidity for this entirely new industry, and they're offering rails to DeFi for a lot of users who can't access DeFi directly in a Web3 native way.
Right.
Coinbase are the perfect
I think
perfect bridge.
that's how I see them. Like marries up, and maybe this is the point to finish on this topic. But that some of these institutions are funnels, and then others like an Aave, maybe a protocol that you interact with, and everyone has their own. The mosaic analogy you used, I think, is interesting, but that they can be onboarding or offboarding platforms for these people, and that you need these intermediaries or these next steps to move, from 0.5 to 1 or from 1
Yeah,
to 2.
their role is distribution, and they're great at it.
What I
They
will
could be
say
better
is
at it,
we
but
could
they're
do
great
a
at it.
whole episode on this, and I'm conscious time-wise that maybe we draw that bit to a close and move on to another question. I mean, I had one which was just kind of touching on what Ajit was saying about focusing on risks, but there's also opportunities. As to what opportunities in the space are really exciting you going forward, might be a nice note to focus on.
Yeah, so lots of things, right? Lots and lots of things. So Aave community is phenomenal. I think one of the Steiny's greatest achievements is building a culture of innovation. And people fork our code all the time, and there is Geist protocol and that protocol and this protocol which just forks Aave. What you can't copy is the culture, right? I mean, you can copy the code. The code is free. There's no license on it. So, but what we have seen is, people building. There is an Aave grants DAO. Now there is a risk DAO. So every part of the protocol we are very aggressively decentralizing, right? So this is the only time where I don't worry about whether I work for a company or not, because being a member of community, I can contribute to the innovation, irrespective of whether you are an employee or whether you're not an employee. It simply doesn't matter, right? I mean, so having that sort of community involvement and decentralization is something I'm truly proud of. And in the last a year or plus that I've been here, I think we've done a phenomenal job of very aggressively decentralizing everything, right? So, and we'll continue to do that. Wherever we see spots of like relative centralization, we'll very aggressively decentralize. First of all, it's it makes sense, as in for the sustainability of the protocol, just like Bitcoin and Ethereum, decentralization is extremely important. Secondly, to bring more innovation and open, fairness and meritocracy, decentralization is very important, right? There should be no scenario where if you went to Harvard or if you went to work for Facebook, you have somehow a higher privilege to contribute than some guy from nowhere in Blackpool or from my hometown or whatever, right? I think you should have equal access to contribute. Now, so we're doing that. The second thing is we're bringing a lot of every time we see something in Web3 that's exciting, like gaming, like NFTs. We have launched an experiment pod. So we're doing a lot of experiments. Some of these will fail and die, and so I think Stanley's remarkable insight here has been that sure, we had a lot of success with our first protocol, but that doesn't give us the natural right to. And if we don't relearn to fail all over again, we're not gonna build great things. So I think we're sort of building a culture where it's okay to fail, and we will do a lot of experiments and we'll fail, right? And that's how we will build great product. The third thing is institutions, of course. So the whole permission market opens a pathway for institutions to contribute to governance, and then also innovate, right? So they should be. It's the institutions who should be building institutional DeFi products. It's not just the Aave Genesis team, or The fourth thing is we just launched a risk DAO. Right, so the risk DAO is interesting because now all the decisions around protocol risk parameters, stress testing, engaging various service providers, legal aspects. A lot of things will also get decentralized and out there in the open. Then I think the cross-chain aspect is really interesting because we are sort of the world is cross-chain. I said that
Yeah.
a year and a half ago, and I think I got no love from my friends in the ETH community for that. But the world is now provably cross-chain. Aave is a cross-chain protocol. We're going to deploy on various other chains and but we want to have the consumers to not have to worry about which chains they're interacting with, right? So we're building a truly cross-chain protocol and a shared experience across this web of value. Then I think what else is interesting? There's just an awful lot that's interesting, right? There is just so many protocols that are building on top of Aave right now. And the best part is I accidentally find out. So sometimes the only way to find out is when someone tells you or you hear about it on Twitter, and you're like, "Wow, this thing is cool. How come no one told me?" And you're like, "No, no, they're not supposed to tell you." So this is great, right? So I think that permissionless innovation is the coolest thing I've actually been part of in my entire life. And I think this has been a phenomenal year to see that firsthand.
No, I
Yeah, I
love
think
it.
that kind of wisdom of the crowds and permissionless innovation thing is like a real kind of, I guess, differentiated point of value for the crypto ecosystem, right?
And coming from a small town in India in the middle of nowhere, I have a chip on my shoulder. So, and I did go to the best school and all of that. I got a lot of degrees and whatnot. But one thing that makes me really happy is when you don't need to go to Cambridge or Oxford or Harvard or any of that shit, and Goldman Sachs, and you have as much right as anyone else to succeed and be known for your contribution. I think that that makes me very emotional, and I think if we can create that sort of society with DeFi, or at least even an experiment, I think we've done enough.
Yeah.
Yeah.
We've done, and we can do more.
Oh, it's
Yeah.
lovely. And you also you've done some interesting angel investments, I think, right? Or you've been involved. Was it P Stake I saw?
Yeah,
You were on, like, there's some cool opportunities even like that you're
yeah.
helping
No, I've been.
people with.
I think I have a Bill Campbell fetish as a person. As in, Bill Campbell was kind of the greatest coach in Silicon Valley, and if my career ambition is to be 1% of that. And so I've had the opportunity to support a lot of good entrepreneurs and share my experience So and all the learnings from AAVE and everywhere. So I'm very happy to be useful in the Web3 ecosystem. Sure, it pays well to do that, but that's not the best. It pays well in bull market. It pays terribly in bear market.
Yeah.
But yes,
No,
it's been quite a satisfying experience to be useful to a lot of entrepreneurs.
I mean,
Well, I mean, the fact that it pays well is a good thing, right? That's the genius of the beast. If we can
Yeah, it's
create a
the Ben
situation where,
Franklin. Yeah.
yeah. I mean, on that note, where can people find you if they want to get in contact with you to either offer you these opportunities or
Yeah,
ask
so
you some questions?
we are on aave.com. So Aave, AAVE is the Twitter handle for the Aave protocol. Mine is Chain Yoda, ChainYoda. It's memorable and slightly hilarious.
It's the best. It's the best at in the game. Chain Yoda is. Yeah.
Yeah. So and I'm always we are always available if any of our friends in traditional finance or elsewhere want to learn about Aave and DeFi and how it works and what they can do with the tech. We are always available.
Well, I mean, we'd love to get you on for round 2 and more. I think there's plenty we could do and cover. Maybe a multi-parter.
Definitely.
Thank you
I'm
so
up
much,
for
James.
talking about that open banking stuff in more detail because I've been fairly deep in that over the last 18 months. So.
Oh yeah, so maybe I should be hosting that one, and you can answer
Yeah,
questions.
cool. No worries.
You're the expert, aren't you? So.
I suppose so. Yeah.
Ajit, thank you so much for your time.
Yeah, thank you.
Thank you. It's been a pleasure.
Thank
you so much. Have a nice day.
We'll put everything in the show notes for everyone to reach out to you as well. So yeah.
Thank you. I really enjoyed this. Thanks.
Yeah, likewise.
Bye.